This AI-generated video takes a deep dive into market analysis of global trends in card-linked wallets. Let's get started. The sector demonstrates a 20.63% funding CAGR over the past 3 years, indicating a significant investment growth trend despite a recent slowdown to only 1.15% over the last year. With a funding amount of approximately $634 million raised in 2021, the momentum within this market segment has shown great potential for future growth. While the average growth rate had been impressive, more recent dynamics have raised questions about sustaining this upward trajectory, highlighting the need for continuous innovation and adaptation. Current market penetration stands at a score of 2.22 out of 4, revealing a high level of maturity in the ecosystem. Notably, 22 of the total 32 startups remain active, with 4 companies having been acquired and 1 going public through an IPO. The distribution of these startups also reflects a healthy transition into higher stages of development, with a considerable number moving past the Series A rounds, demonstrating robust support and interest from investors. Examining some of the notable startups, Samsung Pay, for instance, has been a key player in recent development, raising substantial amounts through various funding rounds. Apple Pay is also a considerable force, being widely adopted across international markets, leveraging advanced features like tokenization and biometric security to enhance user trust and accessibility. Each year, these technologies continue to evolve, showing an increasing need for seamless and secure payment solutions. Recently, Apple launched its touch payment feature for the iPhone, which allows businesses to utilize just the phone for contactless transactions, thereby broadening the accessibility for smaller merchants. Moreover, the recent partnerships between store cards and major payment platforms like Visa introduced new capabilities, such as Click-to-Pay, set to debut in 2025. Visa's incorporation of enhanced security measures, like Visa Token Service and Visa Secure, indicates growing emphasis on consumer security in digital transactions. Additionally, the rise of AI-driven innovations is expected, as companies integrate these technologies for improved transactional efficiency and fraud detection. Key players in the market include established brands like MasterCard and Visa, who continue to adopt innovative strategies to maintain their competitive edge. Visa, for example, has reported a 15% increase in net revenue in Q3 2025, indicating a strong positioning within digital wallets. Meanwhile, MasterCard enhances its market presence through strategic integration of services alongside partnerships with fintech startups to leverage new technology. On a broader scale, political and regulatory factors are becoming increasingly relevant. Stricter regulations in various regions, particularly regarding consumer protection and cybersecurity, might impact how companies operate and innovate. The growing societal preference for contactless payments, particularly post-COVID-19, suggests that digital wallets must adapt in alignment with these shifting consumer expectations. In light of these analyses, companies looking to invest in or partner with digital wallet providers should consider not only the investment growth potential, but also the technological innovation strategies of these firms. Collaborations or acquisitions could be strategic moves to accelerate growth while navigating the changing regulatory landscape and consumer preferences effectively.